Hi everyone. There's a question that keeps coming up in regards to sort of the basics, and I've probably been asked this question, um, I don't even know how many hundred times now over the course of the existence of my site and just since I started writing in general. But and that's just in regards to picking horizontal support and resistance levels. Number one, identifying them, and number two, how to trade them, what to do when price actually comes into them. And there's a good thing and bad thing with this type of strategy. And the good thing is that you're using raw price and transition points for entry levels. Okay. The bad thing is that there's a lot of confusion without using anything else in terms of what to actually do with that level. Now, I've probably said many times now that diagonal trend lines, especially major ones, are definitely going to take precedence because they're obvious in terms of momentum or what the intent of the market is. So when we do get a break on a diagonal trend line, we're basically headed up to complete one natural movement before it's on to the next item. Okay, so playing breaks on diagonal trend lines is basically the kind of the grunt of what I do now. In addition to looking for reversal structures around levels like this. So first, let's talk about identification. And this is something that I've probably been doing since the day I started trading. And that's just basically taking a simple horizontal line on your chart and dragging it down into an area of heavy confluence. Now, conventional teaching is going to tell you to pick off these highs, these absolute highs and these absolute lows. And what normally happens is you don't see perfect double tops. It's extremely rare when that occurs, and it's because of other things happening that we're going to talk about in just a few minutes here. But essentially, when you're drawing a line like this on your chart, the first thing you want to do is go right into the base, all right? Because this is where you usually find the good stuff. Okay, so essentially I'm just cutting off the tops of the peaks, and I'm going and cutting into the range until I find an area that has served as a transition point many times over. Okay, and usually you're going to find these in the middle of a range. Okay, and you can do other things with that. So if I go down here, I've got another one right over here. So I'm basically looking for hit. Okay, on this line as many times as I possibly can. Okay, and basically as we come down here, we've got 1, 2, 3, 4, if I want to be anal about it, 5, 6, 7. Okay, up here we've got 1, 2, 3, 4, 5, 6, 7, and so on. Okay, and then we also have the peaks just beyond the ultimate peaks that get used as support and resistance as well. And these are going to be a little more ambiguous sometimes, but basically what we're doing is, again, we're just going into the range. Okay, we're not using the absolute highs or the absolute lows, and we're picking a line that's basically got good history behind it. All right, so if we go back here, we've got sort of a spike base over here. Price came up, renewed selling pressure, used as resistance because the selling pressure doesn't go away. Same thing over here. Okay, and then we're back into our range on the other side of the chart. All right, now the question is, when price does come up and hit these levels, is it going to fade? Is it going to break out? What's the difference between this and this? Okay, and the key word here, or key words, are natural movements. Okay, we want to see price complete a full natural cycle of where, based on what just happened immediately before it. Okay, so we're on a 60-minute chart right now. And so you see price coming into this level. Okay, and we already broke beyond this high over here. Okay, is this going to hold? Yes or no? And this is where things, the sort of the water turns a little murky. Okay, so what we can use are just sort of a number of different things. And again, like I was saying about diagonal trend lines, sort of the same thing here. All right, what we want to do is we basically want to break up this range, and we want to find our transition point. Okay, so you can see the last time this diagonal trend line was hit, okay, we got a rejection and then more rejection before finally we had our declaration of where price is going. and we're on to the next step. But again, here we go. Where's the next step? Is it this? Is it this? Or up here? Okay, so we can use anything else. I use measured movements to basically determine that. Okay, so on this particular one, what we're doing is we are going from the lowest low to the point in the trend line directly above it. Okay, right about there. And I usually shave off a tick or two just to make sure I'm on the conservative side, because you don't want to miss. And so you can see our peak here came in right at the 2 extension, okay, with 1.618, holding some integrity as well. Okay, so if you're in a fade off of this level, which would be sort of a natural movement, no harm done. Okay, and then we've also got our peaks here that can be queued up. Okay, and that's basically a triple tap, 5-point price move, 2, 3, 4, 5, okay, into the level before we're complete and we come back down again. Okay, so we've got a number of different things that we can use there in order to basically tell us what the next step is in so few words. All right, let's take a look at these levels down at the bottom here. I'm going to draw another one down here so you can see what I mean. Okay, now this one I'm going to go on assuming that if price were to come down, so to make, you know, a downward trajectory here, I want to basically say that it's going to cut into this range before it reverses. Okay, so how am I going to do that? How am I going to figure out the point where that happens? Basically, all I'm doing is the same thing. I'm drawing my trend line from the lows coming up. Now, we don't have a retest on this trend line. If you follow me for a while, you know that when I do measure movements, I generally like to see either a solid point of confluence from the very last leg, like we had over here, or after the trend line breaks, I'd like to see a retest on that level to make sure that I'm drawing the diagonal trend line correctly. Okay, but in this case, what I would do is I'd take the point. Actually, that would vary now. We would have to assume this is our high up here. And we would go down into the point of the trend line directly below it. Okay, same thing. So I'd cut off a couple ticks. All right, so that leaves us with 87.75 as our 2.0 extension, okay, with 88.47 as the golden ratio extension, which would also make sense because we're coming into a range here where we saw our first hint of consolidation before this liquidity gap would fill over here. Liquidity gap is a completely different topic. There actually is a video about that, even though I don't do videos too often. So again, what we're doing though is we're looking for a good natural turnaround. Okay, we're looking for a clean movement. All right, and again, this measured move here is on the assumption that this would be our ultimate high. If this got higher and we've got a better trend line to use, which we probably will, the way this is developing, but what we would do, we'd just simply redraw and we'd start off and just basically repeat the process all over again. So this is going to be our longer movement though. Okay, so, but that's really basically it as far as just sort of the nuts and bolts are concerned. When you're drawing any, when you're attempting to fade any trend line, again, one thing I always want to recommend is going back to the last leg and looking at the activity that happened there. And don't forget, the more a trend line gets hit, the weaker it gets. It becomes less of a big deal as time goes on. And but these are basically, again, they're just sort of transition points, as I was saying, for flows, all sorts of flows, okay? And anytime you have any kind of transition point for flows, the next time price comes back into it, as I was saying earlier over here, that intent doesn't really go away, okay? So when we started falling off the cliff here, what's happening over here is you're getting, again, renewed selling pressure, okay? So that when price comes back up into that area, that selling pressure didn't go anywhere. It's still there, okay? We don't exactly have a lot of time here that's passed between this movement and this movement, okay? And so that's, again, why we're fading, okay? Unless we had some kind of shock announcement that's really going to stir the bones of the market or whatever, you're not going to see anything move, okay? Yeah, so that's the major points. Again, look for those natural movements. You want to see basically confluence of factors lining up. So you're finding the levels by confluence in terms of hits, okay, and then you're determining whether or not that level is actually going to break or hold based on confluence of other factors, okay? And measured movement is just one way to do it. I'm sure there are others, and there are about probably about 8 different variations of measured movements that I've posted on the site so far. All of them sort of serve their own unique value in terms of different environments and things that go along with them. The one that I showed you, or the variation that I just showed you, is the one that I use the most. That's probably the most common. And again, it's just basically becoming adjusted to these types of movements. And so you've got 1, 2, 3 hits up here, for instance, and then again today. You could even dissect this, and you've basically just completed a structure up here, okay? So, and we use these mainly for targets, fade points as well. Measured moves can be actually excellent fade points. So there's more on my site about it, but in terms of actually drawing horizontal support and resistance, this is basically what I do. Again, go into the range, don't use the absolute highs and lows, because most of the time you're either going to cut shy of it or you're just going to go right into the range. So that's probably the biggest take home, especially for rookies, because rookies will definitely tend to use the ultimate highs and lows, because again, that's conventional wisdom and what's been taught over the years. So that's about it for now. So real simple, basic stuff. I just thought I would get this up here because it's probably about 5 years overdue. And thanks, and I will see you guys